What's going on, y'all? Happy Friday. The weekend is finally here, and this is Kevin coming to you really quickly with our Friday wrap up. I want to make sure that you have information, whether you're talking to a potential client, whether you're doing open houses, or you have a client that's under contract, you're taking them out, showing them homes. Want to make sure that you have some good, solid mortgage information as you head into the weekend. So make no mistake about it, the biggest thing on the Fed's radar right now is jobs. Inflation is a long gone concern. It continues to come down. So we are job focused, and we saw a ton of labor job data come out this week. Started with JOLTS, job openings. They came in lower than anticipated, about 400,000 less. That indicated a contracting labor market. We then also saw initial jobless claims, Mr. Mark, by very little, not an overly big concern. And then, of course, we saw today, which I've been shouting from the rooftops, was going to be a clear indicator, I thought, for what the Fed was going to do on September 18th. And what we saw was non-farm payrolls come in, I believe, right around 145,000, missed its mark once again. However, the unemployment rate went from 4.3% to 4.2%. So we had some conflicting data. But make no mistake about it, the labor market is contracting, and that is a major concern of the Fed. That means a slowing economy. That means a potential recession is on the radar, which is the mantra you're going to be hearing. However, the biggest thing is we did not get a clear indicator. We did not see non-farm payrolls come in about 114,000 or like 120,000. I said anything below 125, it would guarantee a half a point rate cut. We came in around the 140 mark, 145, which means we're still in this kind of limbo. No one is really clear on what the Fed is going to do. I think you're going to get a lot of people posturing, shouting from the rooftops that the Fed needs to do a half a point cut, not just a quarter point. But I'll tell you this, the traders, the gamblers, right? Where is their money at? Before the announcement of the numbers today, there was a 59% chance that the Fed would cut the Fed funds rate by a half a point. As we end on Friday, it went all the way down to 29% is where we sit. However, the best news of the week is rates continue to come down with the anticipation that the Fed is going to be doing something. We're moving towards September 18th. The 10-year Treasury market is improving as with regards to interest rates. So we are seeing banks give back just a little bit, and you'll see that reflected in the interest rates that are out there. You have any questions, please don't hesitate to give me a call. And the biggest message I would give everybody if clients are asking, should they lock or wait? I would wait. It doesn't mean that you can't sign a contract for a house. You're not going to close until October anyway. So you don't even need to lock. Somebody just wrote me and said that they don't close till October the 11th. They don't need to lock till October the 2nd, right around that time frame. You got a long ways to go. So there's no reason to wait to get that house of your dreams under contract. Do not let the Fed meeting on the September 18th prevent you from getting out there and kicking tires. All right, everyone, have a great weekend. I am working. Should you need anything, please do not hesitate to give me a call, email, text. I'll be very responsive. And lastly, go blue.